Hello, everyone, and welcome to KJH Insights, our monthly podcast. I am Sarah Bull, partner and portfolio manager at KJH Investors. Thank you for joining us for our November podcast, where we provide you with an in-depth look at the biggest issues affecting the market and their impact on how we are building and protecting our clients' wealth. Joining me today is Joel Clark, CEO of KJ Harrison. Welcome, Joel. Good to have you here as always.
Yeah, good morning.
So, Joel, market returns continue to be strong, and our investment team hosted our client webinar last week, and there was certainly a lot to discuss in the markets. The S&P has now topped 6,000 this year, and I guess we really saw the market run higher since the election ended last week. And I think the key to that is that the election ended peacefully. So help us understand the rally and what's on the minds of the investment team right now post-election.
Sure. Well, the world didn't end, which is a good thing. But no, what naturally happens with humans is we all fear the worst, and it never actually happens. So the good news was the election ended. There was a clear, resolute winner. We didn't go into the courts for 5 months, and so I think markets sort of celebrated that. But let's go up 30,000 feet. The economic conditions that were already in place prior to the election was growth and inflation accelerating. So that's a very favorable backdrop for the economy and markets, especially coming off July, August, where we had a bit of a slowdown. And so with the Trump win, he's more pro-business, lower tax, less red tape. That just added fuel on the fire, together with the fact that, like you mentioned, the election ended, it was swift, didn't drag on, and animal spirits kicked in. And we had a pretty favorable post-election rally, and then reality setting in. We're getting a bit of a check back. But listen, I think the conditions are such that are very supportive for a strong economy and a solid market.
Yeah, I think that's really what it was, or what it is, right? Is a bit of a sigh of relief, just that the uncertainty has ended. You had two candidates that were neck and neck, and a lot of questions on how the transition would occur.
Yeah, and they have very different policies. And so there was just a bit of unknown. But I think the biggest takeaway, certainly, and again, this is just for the economy and markets. We can debate other policies in a different form, but really as it relates to investing and clients' portfolios, there's a sense of excitement about reinvigorating the economy. M&A is stirring up. We even had M&A. I used to joke with Peter, we get 3 or 4 takeouts in our portfolios per year. I haven't seen one in 5 years. And so there's just a lot of pent-up demand, pent-up M&A, excitement about a supportive government. I have big expectations next year, especially in the mid-cap, small mid-cap space, which has really underperformed for the last 5 to 6 years. Those 5 or 7 large trillion-dollar mega caps have really taken the oxygen out of the rest of the market, and the breadth is really starting to improve. So if we can continue this momentum, it's going to be a very good market for the balance of equities going into next year.
And optimism is also showing up in the credit markets. Can you talk to us about that?
Yeah, that's a good point, because the flip side to all of this is valuation. Valuation, the equity market obviously has stretched the credit market. We're at credit spreads that are very narrow, in fact, very close to the most narrow they've been pre-COVID, pre-financial crisis. So that's indicative of people feeling good. But on the other hand, it's also, there isn't a ton of value out there. So, you could just be, I think, active management is going to be important. Picking your spots is going to be important, because the broad market and broad credit market is rich in valuation. So you're going to have to pick your spots, pick your companies, pick your industries, find businesses that have a catalyst. Like I mentioned, I think M&A and catalyst-driven ideas are going to do really well next year.
And the U.S. dollar has really been climbing. Reflect on that a bit for us.
US dollar climbing, it's had a huge run, is increasing for two reasons. The first is interest rates are not dropping as much as everyone anticipated. So the interest rate differential between the US and the rest of the world and other economies is pretty wide. So you can simply earn a higher rate of return on your cash by coming into the US. So people bid up the US dollar to put their cash to work. And then the US is a diversified, stable, growing economy that at the moment is the shining star in the world. So I'm hearing interesting stories of companies moving their head office back to the US. It's going to be a very desirable place to build a business for sure.
And you and Peter both talked about animal spirits. What do you mean by that?
Well, that's is a two-sided coin. On the one hand, it gets markets and M&A and trading, gets it flowing, gets it exciting. But also on the other hand, you get a level of speculation that is typically disconnected from reality. One area obviously would be crypto. We have a very supportive administration on crypto that can be speculative in nature. So I think where it really works for us, obviously, because we don't speculate or take flyers, it's just more in the mergers and acquisition front. Like I mentioned earlier, I have a high expectation that we'll see 3 or 4 takeouts across our portfolios next year.
It's amazing that John Maynard Keynes came up with that phrase, I think in the mid 1930s, and it's still very applicable to human behavior, isn't it?
Oh, yeah. I mean, especially with social media and information flows in the millisecond. So it really plays to certainly the environment we're seeing today.
So I just wanted to flip gears a little bit here and just talk about how the investment team managed their process for navigating the market pre-election, just because I think it's important. It provides us with an opportunity to just talk about our investment philosophy. So can you just review that for our listeners?
Yeah, I mean, just to remind everyone, our ideal portfolio is a collection of some of the best businesses in the world, diversified across multiple industries, industry leaders, number 1 or 2 market share, good balance sheets, very good financial metrics, high return on capital, good secular trends, management teams that are aligned and motivated. And we allow those CEOs to compound our capital over long periods of time. So we don't trade around events such as the election. What ends up happening, though, is opportunities present themselves because flows in the market get too far one way. And, post-election, healthcare has been smashed. And the rubble of a few healthcare companies is some gems that we'll take advantage of. And that's sort of the extent of it. But pre-election and post-election, our portfolio looks identical.
Yeah, I think that's a good way to put it because I think, as Peter always says, we are long-term investors and we care more about profits than politics.
Yeah, and the global economy is much bigger than the leader of one country, even the largest country economy in the world.
So I think we've talked about opportunities and what's been driving the rally. There's always risks. What are some of the risks that the investment team are watching right now?
I think twofold. Inflation has not gone away, bottomed at 3 and has started to reaccelerate. And you've seen the bond market, bond yields back up. There's a tipping point in which yields can't go any further before we have a significant issue. We have a highly debt-laden governments globally. Cost of capital is a real deal for governments. So they can't handle interest rates much higher. Of course, higher interest rates increases the cost of capital, brings multiples down. We had a pretty big correction when the 10-year got up to 5% and we're at, call it 450. So that definitely bears watching. We're not able to put out the inflation fire. So it's still there. The second, taking the other side of the Trump win, they won the House, the Senate. And so they could be much more aggressive on policies, a bit less of the checks and balances that you like to see, and you just don't know how far they could take certain things. So those would be the two issues that would be on my mind, and really the third would be any geopolitical surprise. Those things are very hard to handicap.
Yeah, the current trajectory of debt, I mean, US federal debt, 36 trillion, it's not very sustainable.
No, that's a big number and growing.
It's a big, big number, big number. So, Joel, I think we should probably think about wrapping up here. We'll have our last podcast next month of the year, which is hard to believe. Any final thoughts to our listeners?
I think, like I mentioned at the beginning, the economic conditions are such going into next year, it's favorable. Globally, growth is reaccelerating, and that's good news. We have a supportive and potential changing policy-driven U.S. economy, which is good news for the breadth of the market, which is, people don't allocate their portfolio to having 40% in 7 stocks. And so this is really good news for diversified investors going into next year. So I'm encouraged, always things to be mindful of. But if you think about all the things that we've encountered in the last 5 years, pandemic, inflation, interest rates, geopolitical, and we have the market at an all-time high today, it always tells you that, it's hard to call markets, and you have to just focus on buying great businesses and holding them for long periods.
And that really is always being the number one lesson for investors, right? Don't time markets.
Exactly.
Okay, so thank you, Joel. Thank you for your insights as always and for sharing the views of the investment team with us today. And thank you to our listeners. We'll be back next month with another issue of KJH Insights, really focusing on our perspective of the market. And as a reminder to our listeners, if you have any questions about your portfolio, please reach out to anyone on the investment team or private client team at any time. We'll continue to provide you with commentaries and updates on the market as the market narrative unfolds. And all of those are available on our website at kjharrison.com. So hope everybody has a good month of November, and we'll speak to you again soon.
This podcast is produced solely for informational purposes and is not to be construed as an offer to sell or the solicitation of an offer to buy a security. The information herein is based on sources we believe to be reliable but is not guaranteed by us and does not purport to be a complete statement or summary of the available data. Any opinions expressed herein are statements of our judgment on the recording date and are subject to change without notice. Any unauthorized use or disclosure is prohibited. Receipt and/or review of this presentation constitutes your agreement not to reproduce, display, modify, distribute, transmit, or disclose to others the content, opinions, conclusions, or information contained in this podcast.